look, we're going to move into global, then LATAM, and then public and private markets credit. Go into breakouts. We'll explain that later. Then industries, philanthropy and impact, next gens, breakouts. You'll have a glass of something. Where's MJ? Could be a mocktail. Could be whatever it is. Could be water with ice. Um, MJ, by the way, runs how many members do you have now? 300,000 at Lucid. It's basically an app and a community for sober dating, sober everything. And it's a lived experience. All that said, we're going to then talk about impact and do these breakouts, and you'll have a glass of something in your hand and beautiful view. So let's kick it off. Peter's already up here. He's a step ahead. If Ben and Rosemary can't make it, a lot of people, by the way, that's why we need this virus update. How many people know somebody who's like has caught something? Yeah, it's a thing. So maybe Ben, you could come up. And is Mauro here? There he is, please. We're going to give a little bit of insight into LATAM before the LATAM panel, and Tim. And someone's iPad. Whose iPad? Bill? I'll put it right here. So if you, the purpose of this panel is to really set the tone, like what's happening in the world. Bill just talked about a lot of US centric, but some global indicators. And our classic question is what scares and excites you, right? And then I'm going to let you go last. And Tim, since you were already speaking, let me give these guys a flavor for how we roll. Why don't you explain what scares and excites your part of the world? And then we'll go to Peter, who does LATAM, but he's going to talk a little more broadly. And then we have the Brazilian case. And we have a lot of Caribbean, Brazilian, LATAM, Central America going on here. So over to you, Tim.
Sure. Should I use this one here?
Yes, that would be even better.
So I think you asked this question in New York in December.
We ask it like every time.
I think, you can ask it every week, I think, because it probably changes quite often. But dollar strength, obviously, I'm an emerging market investor, so dollar strength is a bad thing.
For the emerging markets.
Yeah, for emerging markets. It could be bad for U.S. manufacturers and exporters as well. But for emerging markets that are export focused, it could actually be a good thing, especially ones who are, have a domestic currency expense base and a revenue in dollars. So you can structure portfolios to mitigate some of this risk. But geopolitics and military confrontation, war, this keeps me up at night. And obviously in the region that I'm investing in, emerging Europe, emerging Eurasia, specifically Ukraine, this is obviously the biggest thing on my mind right now. And Trump's inauguration and an election win and the things that he's said, as well as the things that he's actually done, are causing a lot of uncertainty. I would say the unknown unknowns, to quote what Rumsfeld used to use for his framework of risk management, is really critical here. We just don't know what the Trump administration is going to do in the next few weeks with regard to the Ukrainian situation. I have a feeling
Does Trump know?
I think he has I met with former a U.S. ambassador to Ukraine, Kurt Volker, and also I also met a rear admiral of the Navy, former Michael Hewitt, in Davos last week. And I was pleasantly surprised and they have good insights into the Trump administration. I was pleasantly surprised that Trump is not going to throw Ukraine under the bus, like I had assumed for a few months before. And that he is basically going to enforce the Kellogg plan. He's going to offer Putin the Kellogg plan, which is 100 days before peaceful, resolution of this conflict. And if Putin does not accept these terms, he's going to double down on sanctions. And he's going to double down on military support for Ukraine. So I'm hoping that peace will break out. and that the future of my region will be much brighter with the end of war.
That would help your portfolio.
Yeah.
So maybe we go to another BRIC country with Brazil. Your views in general.
Okay, well, it's a pleasure to be here. My name is Mauro. I'm a former fund manager who's been sitting on corporate boards of Brazilian companies for a long time, large companies like Petrobras, Vale, Embraer. And I actually did prepare some slides, but I don't think we had a chance to have them up there. So I'm going to have to just
Talk and we'll get
talk about them. Things that keep me up at night and at the same time spell opportunity from what I see in corporates in Latin America and in Brazil have to do with how they're structured and how they're driving their strategy. So first thing to have in mind about Latin America is that it is a relatively closed region to trade. If you, with the exception of Mexico, of course, Chile and some of the smaller countries in Latin America, you have trade over GDP being closer to 20, 30%, which is a very low number. So these economies, no matter how much you think about it, and they're still not very much integrated to the world. Also, they differ from Mexico in their dependence on the United States. Of course, Mexico is almost the entire exposure of Mexico in terms of trades. For other countries, that is very, very different. And China has much more impact. As a matter of fact, for Brazil, Europe, and the United States are almost the same size. So that's one thing for having in mind in terms of the exposures. We have excellent companies in Latin America, but we haven't been able to shake off the facts that we're still the barnyard to the world. So the configuration of our exports, again, with the exception of Mexico, is basically primary products. We haven't been able to implement supply chains that add a lot of value, and this is detrimental to the region. This has a lot to do with competitiveness. It's a shame I don't have the slides up here, but I have a ranking from JP Morgan showing Latin American countries way down in the competitiveness rankings among different countries. And that has to do both with capital productivity and labor productivity. So with that setup, it is really hard for these companies to compete globally. Investment rates in the region are much lower than it should be. Taxes are much higher than it should be. Governments are much bigger than they should be. So the fact is that China has been gaining importance in the region, especially given the lack of a U.S. policy for the region. We can imagine that the new administration can change that, even though the past few days suggests otherwise, a more adversarial approach. But I think it is an opportunity to reset the relations and provide the platform for these excellent companies to thrive. Companies in Latin America are resilient because they have to do with a lot of volatility. So we're living in a volatile world right now. Latin America is by all means a lot more volatile than this. Again, I had a bunch of charts just to show this, but you all know this very well. It is the quintessential VUCA region. It's fashionable to talk about that, but companies in Brazil know that more than others. Despite of this, it is amazing how we still see a home bias in the companies in the regions. I mean, these companies, even when they have developed global competitiveness, they are unable to become international companies with very few exceptions. I have a list here of Brazilian companies, for example. I have two cases of companies that are reasonably international, JBS and Gerdau, but others, if you measure their number of employees outside of Brazil as opposed to inside Brazil, we have numbers like 2-3%. Even the large banks, Itaú and Bradesco, these are banks with total assets above $100 billion. These guys have less than 10% of their employees outside of Brazil. So this is a complete lack of diversification, which, in my opinion, has to do with poor strategy. These firms believe that they are very good players in their home markets, but they haven't been able to diversify. And since the countries are volatile, they destroy value for not doing that. So the ideas that I wanted to share with you is basically that if we're living in a VUCA world, Latin American companies know how to deal with it. but they haven't been able to do a very basic thing, which is diversify away that risk. This is an opportunity for investors who can work with these companies to make them diversify. And it is also a risk because they are very exposed to their realities. I'll stop here.
So the good news is you're on two panels.
Yes.
So another bite of the apple when Adam gets synced up with me. So Peter, you cover some of these markets. Your thoughts?
Well, first, I don't know if I have to press this. There we go. First, I think can breathe a little sigh of relief when we didn't see these massive tariffs that we kept hearing about during the campaigns. And, you know, as part of these initial presidential executive orders. So that I think we can breathe a little bit easy. And maybe there are some adults in the room in the White House right now whispering to our president about that. With that said, it's clear that this America First agenda is probably not great for global investing. If the dollar continues to stay strong, as you'd mentioned early, it really mutes all kind of returns, regardless of how well you're doing around the world. If the dollar gains 10%, that's a 10% headwind if you're invested abroad. Already, you can see emerging markets, which are sort of 85% of the world's population, more than 50% of the growth story right now, are definitely going to be growing slower than people had, let's say, planned over a year ago. I think the plan now is the projections are only around 3.5%, but there's huge variations there. So this year could be the first year that China grows below 5%. I think the projection right now is 4.6%. That's the lowest it's been in 35 plus years. Now that doesn't, I think that those statistics often don't give you the full picture because China's economy today is 100 times bigger than it was probably 35 years ago. So even only growing 4.6%, you're still talking about the world's second, and some people would argue maybe the largest economy, still adding a decent amount of growth. I think the bright side in EM is still a country like India, which is still at the early stage of its kind of big total factor productivity gain like that we saw in China over the last generation. I think they're supposed to grow by 6.5% this year. Brazil, I think, is only 2.5%. It's relatively low.
Sorry, I was just getting my notes organized.
Brazil's projected growth this year, 2.5%.
It's 2.5, yeah,
Yeah.
but coming down.
Coming down, a little slower than people had anticipated. So growth again is a little bit muted. I wish I could be optimistic. The only thing I could say is the die have not been cast yet. We don't really know what the tariff situation will be or won't be, how much trade really is going to be stunted. The one thing I always like to remind people is that, when you look at the tariffs really are going to be targeted towards the countries that have the largest trade deficits with the US. And oddly enough, with the exception of Mexico, China, and Vietnam, the rest are actually largely developed economies. It's really the EU and Japan. It's the same cast of characters. And those are really the ones that I think Trump is most worried about. In fact, how many of you saw what was yesterday? How long did the tariff last on Colombia? About 5 hours. So one of the things that people just don't realize is we don't even really have a very big trade deficit with Colombia. Colombia not a very, Mexico is over $300 billion. The net, I think, surplus that Colombia has with the US is around 350 million. It's quite small. I think our total trade with them is less than $2.5 billion, relatively small. Although it just shows you that how quickly our president might be using this as his quick sort of rap on the nose, which is if you don't do what I want, it's another 25% tariff. So we just have to keep that in mind, even though we haven't really seen anything just yet. There's clearly a threat that's always going to be there. And who knows how this is actually going to shape 2025 or the next 4 years. Maybe I'll just stop there and pass it off to you, Ben.
So for a different kind of perspective, first of all, who here has seen the musical Hamilton? What? Any
should
other
be fun.
languages? So I happened, just as I met Josh Larson, who we knew in our Russia days, he ran Carlisle. um, And introduced it to Hamilton Bank. I had just seen Hamilton, and the opening scene, he's on an island, right? That's where he's born. Well, this is Hamilton Bank, is in St. Kitts Nevis. And you've got the founder of Hamilton Bank here, which is a new kind of fintech private bank. And you see the world, people in Naples see it differently. I certainly can attest to that from being there. I'm just curious how you see the world, and particularly from your perch. And you want to welcome us, by the way, soon, right? We're going to try
Yes,
to do something
anytime,
down
for
there.
Sure. Thank you. Thank you very much. I work with the Hamilton Reserve Bank. This is the hometown bank of Alexander Hamilton. I can tell you the guy does exist. I'm glad you like the shows. It's a Nevis, St. Kitts and Nevis, where you guys can come over from Miami, 2.5 hours to get there. What's nice about this place, it is one of the old-fashioned private banking homes in the world to Switzerland in the 1950s. So what I'm saying that really from bottom of my heart, which is coming down to the asset protection, the benefits of privacy. We as Americans cherish a lot in terms of, hey, it's my private information. You don't need to know. My next door neighbor does not need to know. So Hamilton Reserve Bank is the largest global bank headquartered in the Caribbean. We're located in a 12-acre compound, pristine place. Our next door neighbor is the Hamilton's birthplace, Alexander Hamilton's birthplace. The guy was born in 1755, 4 minutes away from our compound. It's where his family's, what do you call it, a plantation's located. It's a beautiful place. So nowadays, from a banking perspective, we serve customers from 152 countries around the world. We serve by Swift wire transfers. We don't take physical cash. We also serve custodian accounts. Our capabilities are possible because of correspondent banking relationship with the two institutions. One is a Bank of New York Mellon, which we have a direct custodian relationship with them, as well as correspondent banking transaction relationship. And also the second one is the Banco Santander. Now, because of the banking capabilities, I tell you, what's nice about it being an international bank and with the size of what we are, we kind of talk to everybody, and our customers talk to us as well. You think about some of the relationship and friends we heard about getting debanked or whatever reason, it's not because of some AML KYC problem, it's because of some political and other reasons. I don't mean to say that in sort of a political way. I tell you from a reality is, a lot of people are having a tough time getting bank accounts. We don't have that kind of problem because you can apply to our account in 20 minutes, you have a bank account 100% online. How is that possible? It's the evolution of financial technology and fintech. So we brought in.
Whose cheese are you taking? Are you taking it from Panama? Are you taking it from, Cayman?
In fact, the kind of a flow nowadays, we're transacting primarily four currencies: US dollars, euro, GBP, as well as Canadian dollars, CAD. We see lots of Canadians, our neighbors, flying down to the Caribbean, literally moving down there, dumping their citizenship. I tell you, I don't know what happened in Canada. I used to love that place. A lot of policy sort of differences driving these investors away. Remember, investment, you ladies and gentlemen, have lots of legs. Capital has legs. You don't give them a good place, I'm taking off. What they do is they all come to a bank like us, having kind of capabilities to transact and holding customer to custody assets. So we're like a Morgan Stanley offshore, with the meaning Morgan Stanley is Citibank behind them. We have a Santander, we have a Bank of New York Mellon. Bank of New York Mellon holds the investment assets. You do a DTC, you transfer that in 1 hour, it's delivered. We also act as custodian, helping folks issue bonds. For example, private companies out of Brazil. We did one last night. It's $38 million custody assets. All of a sudden, you got ISN number, you got DTC number, you got a QSIP. You're able to move the assets around. The second largest bank in Brazil is willing to give them $30 million line of credit.
As we move around the world again, Christine Thompson and I, we were doing a deal. We were looking at St. Kitts. Remember one of our structures, depending on where the money was coming from? She's in Trinidad.
Trinidad is a great place.
But she's now, which is another part of the world, Suriname and
Yep.
Guyana.
We have clients there too.
lot of oil and gas? Do you
That's
touch
oil and
touch
gas.
on that?
I recently met with.
We're gonna, I guess we're gonna touch on that maybe a little bit with the LATAM panel.
Yeah, we recently met a CEO of Stats Oil in Suriname recently, and we also took on a 10-country roadshow around the world for about 2.5 weeks. So the moment we took off from Teterboro, as we saw the world, I tell you, outside the United States, people are nervous. The more nervous people are, more they want to invest in US dollar and euro. I mean, it's really how it is. You got all these issues. So we're speaking to Chinese, Singaporean, Malaysians, South Americans.
Are you getting some Chinese and?
We do. We have quite a few Chinese clients, and St. Kitts and Nevis does not have a diplomatic relationship with China. We're best friend of Taiwan. So because of that, the Chinese coming over, not having to worry about the information being disclosed.
Well,
So
let me-
you think about,
Let me pull
Oh.
back out of the Caribbean for a second.
please.
So where are despite your being from Brazil and Peter, you see everything, I guess. You see Eurasia. Where do you think the most interesting place outside of your world that you either Brazilians are looking to invest in? I think I know what the answer might be, but I'm just curious outside of your zone. Sort of an unfair question.
From my perspective, I think we need to add diversification in general from and that is good for corporates and investors. I talk to my friends in wealth management here a lot. What they see the most is Brazilians bring their money here to invest back in Brazil, which doesn't make any sense at all. So fighting the home bias.
Peter?
I would say that maybe the biggest opportunity sort of outside the U.S. is the India opportunity. You know, this is a country that still has a huge opportunity. Keep in mind that even though it has the same rough population as China, it also has 20% less literacy. So there's still a big education health curve that the country is going to go through, as well as infrastructure. So if you think of the country as being like 25 years behind China, it's got a nice 25-year tailwind ahead. It's probably the last of the great big economic stories in the world.
Again, outside of St. Kitts and Nevis.
We have customers from all of these places, Brazil and India. What I've found is what do institutional guys like you guys look for? Fast transaction, safe, and privacy. The privacy aspect of things has been eroded so much. Cayman Islands, BVI January this year, full disclosure, ownership, control person, board directors. There's no reason to go to BVI these places anymore. So the question is, how do you protect yourself in terms of privacy, including potentially civil subpoenas? You got to go to a place actually respect that kind of
Then you
privacy
didn't
and
answer
law.
the question. Where do you want to invest?
I
Sort of how?
would tell you what our customers are doing. We have
Okay,
a few
sure,
billion
fair.
dollars in custody assets. They are all in fixed income,
Fixed income.
100% fixed income, U.S. Treasuries and whatever it is. And the speculative things making people nervous, they're just not there. It's from what I see.
Tim?
Outside of emerging Eurasia, my home turf, where I'm not allowed to talk my book right now, I would say Western Europe. From a value perspective, it's half the price. It has lower growth, but it actually pays a higher dividend yield. There's a lot of creativity going on there. Yes, it is overregulated. Yes, it has been sort of beaten down because of this overregulation, because of its perception of being a lower growth place to invest than the U.S. But as I mentioned before, I think everybody needs to have some diversity in their portfolio. People should not be 100% exposed to venture capital and private equity in the U.S. They should be global. And Western Europe is ripe right now. It is at a very low point. A lot of bad news is priced in.
Fair enough. Let's open it up. Oh, Peter. Hold on. Let's get I need your microphone.
Sir, we thank you for raising this. We are actually a crypto-friendly bank. I tell you why. Crypto is a sort of a product. It's been a lot of evolving pain. When the U.S. government and Federal Reserve said, we don't want you guys to process crypto, forget about all the innovation. They don't mean anything. They go in the Hudson River, they're done. I think that trend is changing. We've been processing a lot of the incoming wire transfers for the fiat currency from crypto exchanges and sending payments out to the crypto exchange as well. So we are considered a crypto-friendly place. However, we are also very careful in terms of what type of clients we have. Also, we do not currently provide a crypto custody, largely because that safety security issue is not there. BNY Mellon, sometime they tell us, okay, Q1, you can offer it to your clients until they say go. We're not going to put that kind of a security code on our balance sheet, risking customer deposits. So we'd rather work with a third party that have the kind of capabilities, but we're friendly towards that. I think it's an inevitable product and future for the world. Could be people want privacy. Privacy is everything. Without that, nothing matters.
Maybe that's a segue to what people talk about the dollar, you know, some of the BRIC plus nations, and what are your views on any scenarios of a deterioration of U.S. dollar hegemony?
Yeah, I could start. Look at any metric for valuing the dollar, whether it's purchasing power parity using the Big Mac model or a real effective exchange rate model. The dollar is significantly overvalued relative to other currencies. What are the triggers for a breakdown? I mean, the dollar has been rallying on the Trump trade because of the view that tariffs would be strong, but now this is being walked back, and tariffs are not going to be creating a large current account or reducing the current account deficit in the U.S. So there are a few triggers right now for dollar to be reversing course. In the long term, the dollar should have some relative strength, relative growth, relative real rates that are supportive of the dollar, but other currencies will catch up over time. These imbalances work themselves out.
Peter looks like he has an opinion.
I mean, I agree that the dollar's been remarkably strong. I've been like calling for it to fall for 5 years.
Yeah.
And been wrong. And things that I am always reminded of is that, you can be overvalued for a long time. The Swiss franc has been overvalued for my entire professional career. It always looks expensive, and yet it always has a bid. And so I think that the real question is, are there alternatives? And as you mentioned, the euro looks weak. The economy there doesn't look all that great. People have been calling for the renminbi to displace the dollar as the hegemonic currency of the world. I think that the Chinese still have a lot to prove to people before they get into that position. So I just see the dollar as probably staying strong for a reasonable period of time. But I do agree with you, which is you can't be 100% in dollars, and it's often very tough to call the turn. So you do have to, over time, diversify yourself out. I think that's absolutely the case.
I think if Europe starts to issue common currency debt, common fiscal debt issuance, they did a little bit of this after COVID, but if they start doing, for example, a European Defense Fund, $1 trillion issuance in euros, that would create a huge demand for
Yeah, I think people have been waiting for that fiscal union. The monetary union has been with us now for, 25 years, right? But we haven't had that fiscal. And that absolutely, it could be that Trump actually spurs them to actually,
need to get to 5%.
deepen the union and really try to stimulate the economy.
I think that I don't see on the corporate side a lot of appetite to use other currencies than the dollar. Of course, you do have companies like Vale. I understand they are doing some trade in yuan, but companies in general, they want their currency to match their trade exposure. And the U.S. is by far still the most important avenue here. I agree that the euro has more chances in that than the yuan. I understand that the U.S. government was a little upset when the governments of the BRICS got together discussing alternative means of payments. But these governments, with the exception of China, well, eventually India, don't really have the clout and the money to make that happen. So it's a lot of political discourse without repercussion on the corporate side.
Maybe I can just add one point from our observation from customer flow. We're seeing more and more CNY coming in, Chinese overseas RMB, CNY. The settlement part of it is a big problem. The banks, a lot of times, they don't want to take those on. The four currencies I think you, ladies and gentlemen, want to pay attention to. US dollar is absolutely, we're 70% US dollar 20% euro, the rest of what it is. Mexican pesos, keep a close eye on it. It's an interesting currency. The Chinese RMB, struggling. They try to gain some prominence. There's no traction there at all. The world is not peace. If we believe the world is not going to be all peace, hold dollars and euros. That's what our clients are doing. Because in the end, until the commodities, the oil, those things, the price in other currencies, you really don't have a choice. You stay with the hard currency. That's what I think. The CNY, I'm not sure how much they're going to go. There's a lot of outflow money want to come out of China. They mainly want to get the Chinese overseas currency so they can immediately sell it and turn it into euro and turn it into dollars. That's what we're seeing from our clients. Some of those Hong Kong listed shares, they all want to come this way.
I need to buy 2 minutes, so I will take a question. Samir?
British Empire following World War I, right? So the sterling, right, was basically the reserve currency since 1600, right? It became a zombie currency pretty much after 1918 because, the empire could no longer support the, its requirements. It continued to be a zombie currency until Bretton Woods, right, 1944, just because literally there was no alternative, right? There was nobody else. The U.S. wasn't ready to step up and so on and so forth. So is that a potential pattern, right? And that essentially the dollar is considered sort of a zombie currency. Kind of nobody really wants it because we're exporting inflation, we're doing all this like all this kind of stuff, but nobody else trusts anybody else to do any better right now.
Could be, but again, I think the trade flows are still king in that. And I'd like to add that setting up commodities negotiations in other currencies, that would be a trigger point for me. So when we saw the problems in the nickel trading in LME, there was an opportunity for China to pick it up. I don't think it worked that much, but these are avenues that could start to leak trading from the dollar.
You brought up the British Empire, and I think we are now in a new period of a neo-imperialism, with Russia taking Ukraine, with China possibly taking Taiwan, even though it's part of China, and now Trump saying he wants Greenland and Panama Canal for obvious strategic and military purposes, and Canada too. Yes, who knows? But this does feed into currency considerations and future risks. We don't know how these things are going to work out. But if you are building an empire again, making America great again, or greater, making the American empire greater, you might be creating more demand for the dollar in the long run, possibly. But these are all so unknowns.
Well, thank you for kicking this off, talking about the U.S. dollar and different global currents. We're going to stay on one current, which is actually several currents inside LATAM. You'll stay, and thank you to our panelists. Appreciate it.
Come join our 361 firm community of investors and thought leaders. We have a lot of events created by the community as we collaborate on investments and philanthropic interests. Join us.